Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Carmen, welcome to the show. How are you?
I'm great. How are you today?
Good. I'm excited. The tables have shifted a little bit. So I was in your office not too long ago recording an episode for your TV show, and now you are a guest on the podcast. So
I
have
know.
you on.
It's exciting. Thank you for having me.
Awesome. So, obviously you've got, a very, very successful real estate investor show. You have a lot of experience in real estate investing. Give us like a quick 30,000 foot view of, maybe how you got started and what your real estate strategy consists of today.
Okay. Well, I started investing in real estate when I was 18. I bought my first property at 18, did really well with that. I'm an entrepreneur at heart. I've been dealing with real estate investors now for 25 years plus specifically. So I spoke at events, real estate training companies and things like this. And specialized in financing for investors. So understanding an investor side, which I am heavily, and also then what the banks or lenders want. So put it together. So 25 years in the industry. Our company, ProFunds Mortgages, and our sister companies, we have ProFunds, which is a brokerage. And then we have Valor Group, which is a developer, Velcon, a construction company. And then we have our REIT called District Property Trust. So very busy in real estate and all aspects of it. And I love it.
That's awesome. Was there a specific reason why you got into real estate in the first place? Like any parents or family members that were investors? Like how did that all happen?
It's just a fluke. I just happened to really like it. Even when I was a kid, I used to love going into people's houses and seeing them when I was like 8 and 9. I don't know why. I found out later that in my dad's side of the family, I guess there were some serious real estate holders in after the war, and they had monster portfolios, and they lost everything when they thought, "Oh my gosh, there's a recession going to hit. We need to sell now." And they sold everything. And that's when the dollar dropped and they really lost everything. So it was a really interesting lesson. But for me, I bought my first house when I was 18. And I sold it just before the crash in the 90s, which that really ages me, which sucks. But anyway, it is what it is. And I made like $100,000 at 18. And then I invested in a duplex and I house hacked, as they call it today. I lived in the main level and rented the apartment above. And I just kept doing it, kept rolling. And then I got into these real estate training companies and things like that I spoke for, and just started to buy duplexes. And then I got into buying apartments, and then I got into commercial, some land development, and it just kept growing. So I have a huge passion for real estate. I absolutely love it. My hobby at night is on my computer, checking out what's available all over Canada, the US, Italy, wherever possible. So I just love it.
Amazing. So you've done a lot. I know you and I have talked about our resorts. I think we both have we each have a resort, and you have so many really cool projects. Is there one that you're like, this is the most fun project or your passion project?
Yeah, well, you got it with the resort thing. So yes, I purchased 85 acres on Lake Huron with a lodge and cabins and everything. We got the Airbnb kind of business, or the hospitality industry, creating the funkiest, coolest places on earth for people to stay at. That's fun. That's my fun thing. I love shopping for antiques and vintage stuff and creating magic in houses and places that other people can enjoy. That's what I love to do. And eventually one day I want to buy a castle in Europe somewhere, either France or Italy or somewhere south of France, and totally do that with a group of investors or myself. So that would be my best passion project. But we do a lot of things here that I also enjoy, which is, picking up apartment buildings and things and creating value and wealth or upside in those types of things. So the passion is that the creative aspect, but there's also where you make a lot of money, which is investing in real estate of all types.
Hmm.
And specifically in this climate, right? People are, oof, it was great 5 years ago. Everyone was buying and flipping
Yeah.
and everything else, spurs left, right, and center. And now people got a little taste of what it's like out there, and, making sure that we're pivoting through something like this type of a climate economically where we don't know what's happening. It's a very rare, odd kind of situation in our world of real estate, but finding the way and the path to being safe in this environment and still making lots of money.
Yeah, I love that you said pivot. I mean, it's one of my words I use as well because, I think as the economy changes, the market changes, I mean, really, there's lots of changes around the whole landscape, rules, regulations, bylaws. I mean, there's so many changes all the time. I think it is
Hmm.
important to adapt and pivot. And, what got you here today isn't necessarily what's going to keep you going tomorrow, right?
Right.
I mean, when you started, you were probably doing small deals that cash flowed really well, myself included. And then over
Yeah.
time, you've got to change it up.
Yeah,
You know?
absolutely. And I think right now, if people focused or honed in on what's necessary today, like
Hmm.
what do people need? What is recession proof? Well, you can't say recession proof 100%. And if I said that to Robert Kiyosaki, he'd probably say, there's nothing recession proof. And he'd yell at me or something.
Yeah.
But recession proof, from my interpretation, would be multi residential housing, not necessarily just affordable, but middle class, right? So
Mhm.
there's always a demand and a need for a roof over our head. So let's buy as many of these types of properties as we can. And also service retail that include very important necessities like medical facilities and, I don't
Mhm.
know, liquor store,
Yep.
banks, those types of things, right? Like those are things that people always need. And if we can buy into that type of real estate, then we know we have a good thing going and we have security.
For sure. Now, you mentioned obviously, Italy and in a few other places. Are you still heavily investing in Canada? Have you, started heavily investing outside of Canada? Like, what's your take on that and your pivot strategy there?
Mhm. So Canada definitely is my home and native land. I love it. Yes, politically, there's a lot of stuff going on out there. However, we do have a huge immigration ratio coming in specifically to Ontario, and there's a housing crisis. And my backyard is my first place. Yes, I have invested in other areas in Florida and in Italy, but I think that my focus is here, my own backyard, because I know it the best. And as I mentioned earlier, we launched a REIT, and so for us, it's helping our investors earn awesome returns and somewhere where they can feel safe, and something that's maybe a little less risky. I'm a risk taker, but not everybody is. And for people that want to invest passively and just have their money somewhere and feel comfortable, it would be something like that. So what we do is we're building out multi-residential properties. We're taking advantage of the government programs that they've initiated. Now this GST thing that Justin Trudeau just announced with housing for rental or affordability. I'd like to see what it's all about, but those types of things that really help the
Mhm.
bottom line. So it helps our investors that get involved in the projects. And then it helps us create more and more of that product because it's more viable
Mhm.
because of the pricing of construction and everything. Right. So for us, building out multi-res, uh, industrial, because of the way people are purchasing these days online. Having warehouse facilities is, I think, important as well, or a good investment. And service retail, as I mentioned earlier, those types of things. So it would be here in Ontario, southwestern Ontario, and more actually to the west than the east. So this is where our portfolio mainly is, like London, Woodstock, Kitchener, Brantford, um, let's say even Kincardine and going up in that area there.
Mhm.
But we also have stuff out in Ajax and things like that. But Yeah. So my backyard is where I like to play.
Yeah, no, that's awesome. And you mentioned the GST. I mean, I think it's a little too late because he's trying to get votes, and I think everyone on this podcast knows my opinion politically about our current government. But just recently they announced that the GST was being essentially removed as for new builds, but they forget to mention all all the fees, right? So all the fees that you still have to pay, your parkland fees, your development fees, and those can still add up to quite a bit. Like
But listen, this
yeah.
is, I mean, I'm with you 100%. I have toilet paper in my house with Justin Trudeau's face on it. Okay. So I don't like him. And I'm sorry, I'm not going to put politics on the front screen because everybody has their own choice of opinion.
Mhm,
Personally, I think he's destroyed it here. And
mhm,
we all anticipated that when he got into the government. But, with this GST thing, like there's a project we're working on right now. We went through we're building 86 units in Kitchener
mhm.
with 14,000 square feet of commercial. It's adjacent to a medical plaza we have. It is being sold to the REIT, but we were able to qualify for the MLI Select.
Nice.
So we got about 90% financing, and that's all in on construction, 50-year amortization once it's stabilized. And then we also got like 4.5% interest on the loan, the construction loan. And at the end of the day, GST would be close to $8 million on that project.
Wow.
So and we did do some affordability,
Okay.
and we did barrier free and environmental. So we blended all three components. So we're qualifying for this. Hopefully there's not a
Yeah, yeah.
what they say, oh, sorry, you don't qualify.
You're gonna max
Uh,
max out to 100 points.
yeah. And so, hopefully the
Mhm,
GST thing comes to fruition because our investors are going to be so happy
mhm,
because we did that as an LP model. So I'm hoping it works because if that's the case, then wow, it does open the doors in a large way because that's just one project.
mhm. That's awesome.
Makes
You
it
mentioned LP model. I mean, everyone, I think many people just think JV, joint ventures originally, and then maybe shareholders. But there's other additional ways that you can structure deals. Are you able to share what you did with the LPGP model?
100%. Yeah. So what we do is we have approximately 30 different projects in different phases of construction and development across Ontario and actually even some out in New Brunswick. And what we do is we create a limited partnership. And the partnership actually, it's limited from a liability perspective for the investors. So they don't have to be the borrower or a covenant on the mortgage that we qualify for. If there's any losses or anything like that, it's just their investment, nothing else. So they're not liable for anything else. So it's a good arrangement for the investor. It's passive. Typically only cash investment in a structure like that, accredited investor. And so what we do is we'll take a project and we'll have our team of analysts come in and say, okay, here's the value. This is what we're going to build. And we need to raise, let's say, $5 million on this project. And then the investors can earn anywhere between, I'd say, 18 to 27% a year on their money. Now, if this GST thing comes back, it'll
Mhm,
definitely increase their bottom line. And so we are the GP. We are the one managing the project. We do everything. We send out quarterly reporting so people know where they're at. And basically, it's patient money. So you put your money in. And what's important for viewers, I guess, is to understand where in the project are you? Are you buying a cornfield or are you buying something that's already approved, reduces the risk? And what are you building? Are you building condos downtown Toronto or are you building multifamily type rental product, right? So it's important to understand where the money's going in that regard for the security of the investor. So they sit on it for, let's say, typically in our projects, they're 2.5 to, let's say, 5 years max. This one here is a 3.5 year deal. And they make about this one here was about 22% a year on their money.
mhm.
And when we sell it off to District REIT, which is our REIT, then that's when they get paid out. and then we move on to the next project, and that LP is complete and closed. And that's how they work. So we have one adjacent to this one I was just telling you about, for 260 units in Kitchener. And it's right at the corner of Victoria and Westmount. So that's another exciting opportunity for rental product.
Yeah, no, that sounds really cool. So, I mean, you obviously went from, house hacking to, building, creating, really some really cool projects, having a REIT. Like, what was that transition? Like, was there, is it just over time? Is it, you had some partners that came in and you were able to skyrocket the whole, what your strategies were? Like, what was the
Yeah.
turning point?
I would say, yeah, that's a very good question. And I would say that I probably in the 2016, 17, 18, 19, those years were the accelerator. It was like a steam engine going so fast. And it was through syndicated mortgages. So many people probably have heard of the stories of Fortress and companies like this that took advantage of many people, and it was disastrous. And that's why the regulators have come in and changed that industry and the qualification processes in it. But that we did so many syndicated mortgages for many, many years. And it was a very good vehicle because we offered an offering on it. We did appraisals on it. We did everything that you should do on a syndicated mortgage. And you just have to execute quickly and exit quickly. Now, when you get into a syndicate, people have a fixed return, but it's a lot less. Like your returns are less, like 12 to 14 in that range. Where when you get into the equity position, you're looking at returns at 18 to 26. So it's a big difference, but they have security on the real estate registered charge. So that's what pushed us forward quite a bit.
Mhm.
Then the rules changed and we had to stop and again pivot to a new place, which is now limited partnerships, equity, working with an exempt market dealer, and those types of things. It's hard. It's always a challenge, and you're always learning something. And we had such a nice fine tuned engine rolling and just flying, and we had to literally stop because when all of that happened, and I'm going to say this because probably make an interesting conversation, but we had an audit here for almost 2.5 years from
Mhm.
our regulators because of this business model. And because somebody else in the industry, or many people,
Mhm.
did it wrong. And mind you, we came out clean after them interrogating every nook and cranny of the company. There wasn't really anything there because if we were bad, they would have found it. So it was a very interesting time and challenging. So no matter how pretty everything looks on the
Mhm.
exterior, there's always challenges, and you just got to brush the dust off and move on and find a new way to make it happen. And that's what we've done. So now the syndicated mortgage is out, and now we're dealing with strictly equity and larger investors and that type of stuff. We still have investments for the smaller investors with district REIT because that's you can invest 10,000 if you want. But for the bigger grandioso projects, those are larger type investors that would come in that have to be accredited.
Yeah, I mean, I guess that must have been a stressful 2.5 years.
Holy crap, yeah. Brutal. And when a regulator comes in, it's intense, man. Like they could shut you down tomorrow if they wanted to. They control everything. Okay. We don't really have any control. They could just say, hey, can't do this. But you know what? I get it. There was a big scam out there happening, and any other company out there that was
Mhm.
doing syndicated mortgages, they were interrogated, right? They had to find
Mhm.
out who
Mhm.
is anyone else out there doing the same stuff, unethical behavior. And so they dug and they didn't find, so it was closed off and everything's fine. But yeah, it was
Mhm.
pretty stressful, I would say. But even the lenders out there in our business, like people don't realize that so many people syndicate money, even larger mix and A and B type lenders, meaning, you've got a equitable trust and then you've
Mhm.
got home trust and then you've got, B type lenders out there. They put their monies together to fund big projects. And so syndication is everywhere. And all of these people in the industry had to really change their process. So it was a big change in our industry completely across the board. It wasn't just for mortgage brokers that were doing syndicated mortgages. It was,
Mm.
across the board in lending. It was intense. So
That is interesting. I think on this podcast I have active investors, and I also have, I'm sure, some passive investors as well. And I want to ask you questions for, I guess, both angles. From an active investor standpoint, if they want to create something like this, who are some key people for them to have on their team, like a securities lawyer? Like
yeah,
I guess I'll open it up to you because you've done this for many years.
yeah. Um, Sarah, I would say that it depends if they're going into joint ventures. So if just a recommendation to investors, if you have really close friends and family that you can just raise the money with, and do a joint venture, it's probably the best bet because it keeps that really intense um, regulatory factor out of the equation. Now, mind you, it has to be truly friends and family because the Ontario Securities Commission finds out you're doing other, they'll come down like this with a hatchet and it'll be it. So make sure you're doing it right and actually speak to a securities lawyer and find out if you're doing it the right way so that you don't get into any trouble because it's not worth it at all. If you are getting into larger things and you do need to raise capital through an exempt market, you need to raise, $5-10 million, and you can't do it with just your immediate friends and family. Then you definitely need to find an exempt market dealer that will work with you on it. And you put together your offering, and then that exempt market dealer then is the one distributing and raising the money for you. So, and that's a little pricey, but you know what, worth it because it actually washes your hands of any of the issues that might occur if you're soliciting or selling or distributing on your own. So, and that's a really, for me, I'm not a very disciplined person. I'll just go and do, but I've learned the hard way through all of this actually, which was now in hindsight, it was a good thing that happened because it really put everything into perspective. Like, this is how
Mhm.
you have to do it. Don't go off, don't go off that road, stay on that road and let these people handle this. And then I can focus on my gift, which is creating value in real estate.
Mhm.
And so it worked out well that way. So I just suggest highly do it the right way.
Of course. And where
Yeah.
does somebody find the right exempt market dealer? Is it through others
Great
like you
question.
doing it, or
It is not an easy feat to find. I think downtown Toronto has a ton of them, but also what they can do is actually, I think there's a website with the Ontario Securities Commission that lists exempt market dealers. And then I just research which ones are, catered to this type of investment that you're presenting. And you might find some EMDs that would handle it. And if you're and they have to be able to service the province that you're in. So that's another thing. Like, is it Canadian? Now, if you're in the States, that's a different animal. But for here in Canada, I would suggest getting on that and just going through each and every one and finding one that would suit and then talk to them because you have to have a relationship
Mhm.
and it has to be a fit, right? So
Mhm. Okay.
if they're
Okay.
very, you know, if there's a clash, obviously in
Mhm.
personality, then it won't work. You got to find somebody that will fit.
Great insight there. So, for somebody wanting to lend money or to potentially participate in, doing something, a project with you, whether it's through your fund or whatnot, what are some things that like you want the listeners to be aware of? Any insights or tips of
Mm,
what it is that you do that might be different than maybe other
right.
funds out there.
Okay. Um, I think that we're vertically integrated is really key here. I've had so many experiences in my past. I'm writing a book right now, which is going to be very exciting, launching it in the spring. And it'll tell all the tales of the good, the bad, and the ugly. And holy crap, I've been through so many things. And I think the key is management that you control your situation, whether it's managing an apartment building, whether it's building an apartment building, or whether it's handling the development aspect of it, because I've been burned in each and every category. And so what we've done is we've launched our own property management company here. We have our own analysts that go through every deal, every nook and cranny, because you can never take anything for face value. You need to look into everything. And for the development aspect of it, it's our own team. So we have planners and engineers and all of those types of people working away on the planning aspect of it to get the approvals. And then when we finish, we actually build our own product, because I've been had by contractors as well. And we said, okay, let's launch our own. Not that it's a huge moneymaker, but it's just understanding and controlling and saving money, because when you're out there and third parties are doing it, you don't know really what's going on. So having everything in-house for us is key. And when anyone wants to invest, whether it's a limited partnership or getting involved in one of our projects, or whether it's investing in district REIT, anyone can know that everything we do is here, and we manage every nook and cranny because it's critical for success. And yeah, that's what I
it
would
gives you a
say.
lot more control that way, right? To do everything in house.
Yeah. Yeah. And people, well, how do you focus? Well, focus, we have serious people in each department. We have a partner in our construction company that he runs the show, and we trust him, and he's good. On our property management side, we've got really good people, and same for the development. And then we have the finance here too. So we do the financing. So it's a perfect mix, and we handle all of it. And then our investors can just benefit from the excellent returns that we distribute.
No, that's awesome. Now, if they are interested in that, like, what's the best way to get more information on that?
Right. What they could do is they can contact the office in Burlington here, but I have an 800. It's 888-330-3866. Or they can invest at profunds.ca. Is just an email into the company, or call in and just say, hey, saw Carmen on the podcast. I want to talk about investment, and we'll make sure that it's directed to the proper or the appropriate party. So,
Okay, cool. So the next part of this podcast is the lightning round. So I'm going to ask you a series of 5 questions. You can give me the
Okay.
first answer that comes to mind, and then we'll wrap it up shortly after. How does that sound?
Sounds great.
Okay, so here's question number 1. Everybody gets them. Same ones. And again, if you don't know or don't have one, you can pass. But do you have a favorite real estate investing book?
Oh yeah, Rich Dad Poor Dad.
He was just on your show too, wasn't he?
Yeah. We're working on doing some things together.
Good.
But honest to goodness, was the first book I really read. I went to a conference in New York City with Donald Trump, and Kiyosaki was there. And that's when I got his book, and I read it, and it really changed the way I thought about things. And so that's the one that kicked me in the butt and got me moving.
Okay, awesome. Number 2, not necessarily real estate investing, but do you have a favorite podcast that you listen to, or maybe an educational show that you like?
You know what? Honestly, on my spare time, I go home and I just chill out. So I really don't watch podcasts
Mhm.
or even TV or anything like that. If I have spare time, you know what I'm doing? I'm on my computer looking on realtor.ca or properties in Europe or in the States, but I really don't follow, because that's terrible, isn't it?
No,
I should say my own. I don't even watch my own show, for goodness sakes. I haven't seen one of them because
that's
I'm afraid to see what I look like. But anyway,
oh, you look great. You look great. Number 3, what do you do for fun when it's not real estate related or work related?
okay. Antiquing. I love antiquing. And I love painting. So I like to paint, artsy, kind of crafty kind of person, and cooking. I love cooking.
And you have a new grandson too.
Yes, I do. He's 2 already, and he's the
Mhm.
cutest little nugget. So yeah, I love cooking, baking, painting, art, antiquing,
Good.
decorating, designing, that kind of thing.
Awesome. Number 4, if you lost everything tomorrow, all your assets, your money, your real estate, how would you start again?
Hmm. Um, That's a great question. I think I would probably do consulting to get back up and running. So I would be doing mentorship type things because I know so much about the business, and also consulting on financing and things like that. And then as soon as I had some extra cash flow kicking around, I would definitely be investing in something. Or, and I'd say, and I would be looking for deals and joint venturing and things like that and getting back up and going as soon as possible.
Okay. All right. And last final question. If somebody has $50,000, that used to be a lot of money back in 2017 when I first started, but I'm going to still use the same number. It'll be a bigger challenge. What do you recommend that people do with that $50,000 if that's how they want to get started and that's what they have?
Hmm. It depends on what they want to do. Are they working full time? Are they really busy? Do they have a whole bunch of kids and they don't have the time of day to breathe? Or are they working and they have extra time? So for people that want to get started, I would suggest buying like a duplex or a triplex, starting smaller, getting that going and turning it around and learning on that investment. Because I think you can have as many teachers as you like, but until you actually live it and do it and experience it in your own way, you don't learn 100%. So I think starting off with a smaller unit, duplex, triplex, then you can refi that later once you've created equity and move on to maybe something like 4 or 5 units and just grow gradually. Now, if you're going crazy busy and you don't have the opportunity, mortgage investing is always really great. You can put your money into a mortgage, registered funds eligible as well, and earn anywhere between 12 to 16% on your money. And that's just passive income. So that is additional funds that can come into you. You can roll it back in again. So you're creating even more. Investing in a REIT like District, again, same idea, providing yields and upside. So creating wealth. So those are my recommendations.
Okay. All right. Amazing. And so that was the lightning round. Thank you for playing. And if somebody wanted to reach out to you personally, like is the best way on Instagram, or how would they go about that?
You can go Instagram or you can just email me, Carmen@profunds.ca. And I'm happy to assist anybody if they have any questions for sure.
Amazing. And you also have a show, and tell us when the show airs and
Oh, yeah.
the show is as well.
30 Minutes to Wealth. It's 302 Wealth. And my daughter's on the show with me. And it airs Friday nights at 11:30 and Saturday mornings at 10:30. And yeah, we're on season 6. Awesome season. We had a great season. You were on our season.
I
So I'm so
was,
glad you
yes.
came. And actually you can go to our website as well, 30minutes2wealth.ca. And yeah, you can check everything out there. There's a ton of information. A lot of really excellent guests that come on, and we teach people how to invest in real estate. And it's not a sales thing there. It's truly just learning the industry from so many different ways. Like uh, you can have land development, and then we have lawyers on there. We have accountants on there. So it's a really, and it's complimentary. You're not having to join a company and pay
Mhm.
fees. It's just free, right? So it
Yeah.
works out really well.
It's an awesome show, and congrats for all your success and your fund, and helping others as well. Like, as somebody that wants to be passive, this is a great opportunity to get into the market in a capacity, right? So,
That's right.
um,
Absolutely.
thank you.
100%. We have a lot of private money too. So if anyone is closing on a deal, you need to close quickly. Like we raised money in 24 hours for people. I had
Okay,
a
awesome.
client that was closing on a couple of apartment buildings, 24, 48 units.
Hmm.
And at the last minute, one of their JV partners couldn't come in with the money. And we came up with 400,000 for them in like 48 hours. So, and let them close the deal. Then we also have private money to buy these deals with. So if you need money to get in, you get private money, you rehabilitate the property, and then you go in and get your CMHC financing or regular conventional. So private money is the answer for a lot. I use it
Yeah,
all the time.
yeah.
I never buy anything with bank money to start.
No, not the exiting the CMHC like you're doing with the MLI is a great way. But yeah, see, I mean, it's in many places, like the stuff that we're buying is probably not, bank financeable anyways. They probably don't like want to even touch it.
You're right. You're right. Like, for example, the lodge resort place I bought, bank wouldn't have touched that.
No.
And the reason why I got it at such a deal is because I went in firm and closing quickly, and I knew private money. The answer, I probably saved myself $1.5 million just doing it that way. So people worry about the expense of private money, but not realizing the opportunity it presents, right?
Yes.
Of negotiations. So yeah.
Absolutely. And the more that you do, the bigger the deals are, the more outside the box they are, the more this will come into play, that you're going to want to have access to it or know somebody that can give you access to it. And
Yeah,
'cause
absolutely.
I do agree with you. It's more expensive, but sometimes it's the way to go. And then
People should not worry about the cost of that private money. It's a business decision, and you need to think about it in a different way. Not, oh my gosh, it's too expensive, but think about it as this is a tool that you can use to negotiate and create. Even if it just covers the cost of the private money, who cares? You get the deal, you have the money that you need to close the deal, and maybe you get a better deal because you're closing quickly. And so many people that I've worked with over the years, which was probably their hindrance to getting ahead in anything, is they were too afraid to, pull the trigger on, let's do this deal and get private money, right?
Right.
So anyway, that's just my theory.
No, absolutely. So some great insights. Carmen, thank you so much for being on the show. It was a pleasure having you on, and congrats on your success, your TV show, everything. And just like, you're passionate about this. I can tell, like, you love this stuff, right? And it's,
yeah,
it is nice to see. So
yeah. And you too. Very good for you. Oh my gosh, you're so young and driven, and wow. And your success, amazing. Good on you too. I really love seeing it. Yeah, it's amazing.
Well, thanks for being on the show. Nice having you on.
Thank you.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?